morning. You're with Trading Calls after a fabulous last week rather. Let's see what this week throws.
Good morning, Aisha. It's a brand new week and let's hope that this week is exactly like last. Let me also introduce and welcome Gopinath Natarajan, represent IIFL. He joins us live now. Gopinath, good morning. Thank you for joining us. Gopinath, would you use the current strength to your advantage and buy more, or are you a contrast seller and on every uptick you are actually advising your clients to exit?
Morning, Nikunj. Good to be here. See, if you've seen how we've behaved over the last maybe a month or so, India is possibly still the most priciest in terms of emerging market indices, albeit the fact that the premiums have been narrowing over the last couple of weeks when we had the correction. Despite that, if you look at fundamentally, we are trading at about 18 times current year earnings and about 15 times FY12. So at about 5800, 5700, we think we are fairly priced, and probably from a medium-term perspective, we would wait for a correction. And with a 14 to 15% kind of revenue growth which we are targeting for FY12, I think any steep correction would only make valuations much more richer and would also provide a decent upside for investors to profit from.
Gopi, what are your thoughts on Infosys Technologies, and what to your mind was the root reason why Infosys Technologies on Friday appreciated by about 100 rupees plus?
See, I fairly agree with what Sudarshan has said. We've also been bullish on Infosys for a while now, but again at a price. What we've seen over the last few months is that the demand scenario doesn't seem to have deteriorated as much, and we've seen the CY11 budgets from discretionary spending budget from IT budgets from their clients also increasing by about 4% or so, which is fairly in line with what our estimates have been. And again, the pricing scenario also looks pretty stable, whether it's offshore or on-site. So going forward, we see OPMs also being maintained. So and again, we are bullish on Infosys, but again at a price. We wouldn't rush in and buy at these levels, and rather wait for the markets to correct and the prices to correct.
Gopi, how are you reading into Reliance's JV with DE Shaw? I mean, what could be the game plan?
In terms of the game plan, I think it's still too early to comment. But I think Reliance has been kind of aggressive in trying to be a little aggressive in all their telecom ventures, the proposed telecom venture. They're trying to be aggressive, with the BP stake coming in, announcement coming in last couple of weeks before. So I guess these are things which might encourage markets in the medium to long term.
Gopi, but are they diversifying too much? They've picked up a stake in a hotel company, they plan to enter the telecom space, and now financial services, completely and totally unrelated businesses.
Nikunj, as I said, these are things which are a little too early to comment upon, and I guess it all depends on what kind of scale and what nature and what point of time they come out with. At this point of time, we really do not see that the diversification is too much compared to the oil and gas still remains their core business, and it will remain so for a long time.
HDFC Bank on Friday appreciated by about 70 rupees plus. If you look at HDFC Bank, they've delivered on a consistent basis. 30% is what they've clocked for 17 quarters in a row now. Even though, if you look at the price to book for HDFC Bank, which is the benchmark for judging banking stocks, it is trading at a price to book of 4 times. Looks expensive, but they've managed to deliver. Gopi, would you buy HDFC Bank? Sounds like a boring and a predictable business, and but the fact that they've delivered is quite murky.
Boring and predictability are all very subjective, I guess. In terms of HDFC Bank has been on our buy list for a while now. Mainly because of much superior asset quality. And HDFC Bank is, in my thinking, is something which is consumption driven bank. If you look at their asset profile, also close to about in excess of 50-60% towards retail loans. And I guess HDFC Bank, yes, you're right, is a fairly valued bank. It's been expensive, and I think it will continue to be expensive given the environment, given the markets. People tend to go towards consistent performers rather than market. I don't really think is in a very adventurous mode at this point of time. So HDFC Bank has been on our radar for a long time, and we expect HDFC Bank to deliver consistently, not only on the revenue side, but we expect class-leading performance even on the loan growth. We expect them to, the loan growth to be in excess of about 4% compared to the whole segment. So HDFC Bank, yes, we like the stock, but again, let's also look at the market from an overall perspective, Nikunj. All these stocks we like at a price. If you ask me, should one go and get HDFC Bank from an investment perspective right today morning? I wouldn't advise so. We probably the better way to do is to do a staggered buying rather than getting in and buying right at the opening today.
Gopi, you're not sounding convinced to me at all. So what are you mindful of? Crude, inflation, commodity prices? What's the big concern?
See, this has been a thorn for a while. I think when we spoke last also I had mentioned that this will continue to be a thorn for a while now. We don't expect, inflation has been food and fuel. Food inflation, we don't expect that to come off so dramatically. I think we are in for a longish period, extended period of higher food inflation. Fuel inflation, I think it's a global thing. Global commodity price movement is something which we need to track. I guess these two things are obviously a thorn when it comes to the domestic consumption story. So from that perspective, with interest rates also tending higher, we think that at about 18 times current year, markets trading at about 5,700, we think the markets are fairly valued.
Okay, gentlemen, hold on to that.
Gopi, for the week gone by, cement and capital goods stocks also have appreciated. Names like BHEL, JP Associates, ACC. Do you see strength there?
Typically what I've seen in the last 1 week is that even if one were to tend towards derivative data quickly to take some cues, you've seen the market-wide rollover much lesser than the Nifty rollover, which also signifies a very narrow participation, if I may look into it from that perspective. And that my assumption has been a lot of activity on the bank Nifty side and by and large the bank stocks. Capital good, utilities, infra, large asset infra plays are areas where we've been underweight for a while now, and we continue to be underweight on these kind of sectors.
Okay, Gopi, thanks for joining in, and thanks as always for taking time out today.
That's it on this edition of Hot Stocks. It's goodbye from Aisha and me. Thanks for watching.